Time for the latest business news then. It's been a day now since the California lender First Republic Bank has been taken over by JP Morgan. And now investors, well, they're wondering what lies ahead, of course, for the US economy. And Charles Pellegrin is here. You're going to give us all the answers to that then, Charles?
That's right. I don't know about all the answers, Stuart, but at least in the last 2 months, we saw 3 of the 4 biggest bank failures ever in U.S. history. So obviously this is ringing alarm bells for many people. Now, the bank's stocks did see a sell-off in the aftermath of the takeover, but nothing as dramatic as what happened after the failures of Silicon Valley Bank and Signature Bank last month. This suggests that for many investors, the worst of the banking crisis might be behind us, but there is no room for complacency. The latest developments could bring on a slew of new challenges which could have an impact on economic growth. Many in the industry are concerned the crisis will lead to tougher rules for the banking sector, which will strain the ability of lenders to extend credit, contributing further to an economic slowdown. All this is happening as we enter a crucial week for the U.S. economy and for the banking sector. For the next 2 days, the Federal Reserve will meet to decide on what will likely be another interest rate hike and what's been the fastest tightening cycle since the early 1980s. A strategy meant to tame inflation, but that could lead to a slowdown or even a recession. Then on Thursday, Apple will post its first quarter earnings. The company's health is often taken as an indicator or a bellwether for the U.S. and the global economy, and profits per share are expected to drop. And finally, on Friday, the U.S. Labor Department will issue its job report for the month of April, which is forecasted to show a significant slowdown in job growth. And with all of that in mind, let's see how the stock markets are faring this hour at the open in Europe. We're seeing trading either flat or slightly higher ahead of the Federal Reserve meeting on Wednesday. The European Central Bank also expected to announce a decision on rates on Thursday. We can see the Paris CAC 40 just above the flat line, the DAX in Frankfurt up 0.33%, and the FTSE in London up just 0.1%. We're seeing mixed trading, and we saw mixed trading in the Asia-Pacific region. In Australia, the ASX closing down over 0.9% after the Reserve Bank of Australia surprised everyone by hiking its rate by 25 basis points to 3.85%. It had previously held it steady. The mainland Chinese markets, Shanghai Composite, for example, are closed for a holiday this Tuesday. And BP reported stronger than expected profits in the first quarter of the year. The oil and gas group with $5 billion on its balance sheets, less than the same time last year, but more than forecasted. This follows record annual profits last year on the back of the surge in oil and gas prices following Russia's invasion of Ukraine. These results have prompted many to call for BP and other energy companies to pay more tax, as many households are facing high energy bills. The U.S. Treasury Secretary Janet Yellen has raised the stakes in the debt ceiling showdown between the country's 2 political parties. Yellen warned congressional leaders that the government could run out of money as early as June 1st if Congress didn't find a way to either raise the debt limit or suspend it. Brian Quinn has the story.
The clock is ticking. U.S. Treasury Secretary Janet Yellen on Monday warned that America could run out of money to pay its bills as early as June 1st.
If Congress fails to increase the debt limit, it would cause severe hardship to American families, harm our global leadership position, and raise questions about our ability to defend our national security interests.
Previous estimates had put X date, the day U.S. coffers actually run dry, closer to the end of summer. The shortened time frame is now piling pressure on President Joe Biden and congressional leaders. Biden has invited Republican House Speaker Kevin McCarthy and Senate Minority Leader Mitch McConnell for an urgent meeting at the White House next week, but finding compromise will be a tall order. With far-right Republicans digging in, on April 26th, the GOP-controlled House narrowly passed a bill that would raise the debt ceiling in exchange for deep spending cuts to key Biden initiatives and social programs. That bill, dead on arrival in the Democratic-controlled Senate.
Republicans' Default on America Act poses 2 terrible choices. Either default on the debt or default on our country.
America's previous $31.4 trillion borrowing cap was reached on January 19th. Since then, Treasury has been paying its bills using accounting tricks dubbed extraordinary measures. A 2011 debt ceiling standoff took America to the brink of default and damaged its credit rating. Many believe the current one will be even harder to resolve.
We're definitely going into weeks of intense negotiation in Washington.
Yes, I'm sure you'll tell us lots about it over the coming month. Thanks very much, Charles Pellegrin with the business on France 24.